Good morning, it's Market Day Report. Hey, we made it to a Wednesday. That's right. Here it is Wednesday, and we're preparing to trade. We'll open the markets in about 14 minutes. Before that, though, let's see how we traded in the overnight session. And we'll start with the corn market, and corn overnight in the red, down to $4.39. What about beans? Beans, after settling higher yesterday, lower on that November contract, $10.59, down a half penny. What about wheat? You know, wheat was mixed in trade yesterday as the wheat market, Chicago, ended the session at $5.13.5, down 3 3/4 cents in the overnight session. What about hard red? Well, hard red was 3.5 lower at $5.08 1/4. And then for the Minneapolis, the December ended up at $6.06.5, and that was down 5.5 on the session overnight. And finally, over to the cotton market. What happened there? Well, cotton has really kind of struggled here over the last last year or so? Yeah, cotton market overnight session down 27 at 68.50. Helping us break it down, we've got a couple of guests. We've got Brian Hoops with us. Brian is with Midwest Market Solutions. First off, Brian, no flash sales overnight, so what are you watching here in the market?
Hey, Tony. Good morning. Yeah, nothing to speak of as far as real demand news for this market, and I think we need something to kind of overcome some of this bearish weather forecast that we're seeing. December corn's traded, I think, the 441 level for about 7 sessions in a row right now, and not clear if it wants to go higher, wants to go lower, if we're basing, trying to move one way or the other. But the weather forecast that we're seeing, certainly bearish. A lot of rain in the forecast for the entire Midwest. And the production numbers that we're hearing from some of these private analysts, private crop tours for the wheat market is bearish as well. And it's keeping this wheat market subdued. We touched the $5 level yesterday in July, Kansas City, and bounced. Now we're pulling back a little bit in the overnight, which is probably a positive thing from the standpoint if we can hold those lows that we carved yesterday in the corn and the wheat. Maybe we'll get a little bit short covering, but there just isn't anything out there news-wise that says for a fund trader to step in and buy this market right now. We're just kind of languishing at these levels, trying to find some news to trade upon, and there just isn't all that much positive news to push this market higher. So markets are just drifting lower here at this point in time.
We also have Jim McCormick with us. And Jim, thanks for joining us over the phone as we kind of look at what's happening here in the corn market. Again, corn is now in the red for this year, 2025, after settling lower yesterday. We had, and I guess we can go back to the USDA crop numbers. Largest crop in history is what they're expecting. Is that really what's putting the pressure right now in that corn market?
Well, I think there's definitely pricing some of it in. I mean, we've got a long way to go, but as Brian just mentioned, the weather overall looks good. And, you know, you're looking at big acres, and that's what we're pricing in right now. I mean, the fact of the matter is a 1.8 billion bushel carryout is growing year on year. You got the price of old crop corn trading at 40. You got 440. You got the price of new crop corn trading at 440. I agree. I think we're trading a little bit of value here. And then if we do get a weather problem, Tony, the long-range maps still continue to argue as we get it through June into July and August, we are going to turn warm and dry. That could change the dynamics. When you're planting 95.5 million acres of corn, it does seem like an incredible stretch to think we're going to have that trend line yield of 181. We haven't done it for many years. To do it when you're bringing a marginal ground into production, that is going to be asking an awful lot of Mother Nature, plain and simple.
All right. Yesterday, I had the opportunity to talk with a member of the biofuels community and was somewhat interested in what's happening this week up on Capitol Hill, the debate on tax policy. Brian, how big could just getting the 45Z set in stone, if you will, how big could that be for the bean industry?
Well, it definitely would be huge, especially for a product like soybean oil. And that's where we've seen a lot of buying interest in the market. We had a huge rally yesterday off of the news that you're mentioning. Bean oil rallied to new highs for its move at the expense of selling soybean meal, which is languishing near its lows, and it really pulled soybeans higher. Soybeans kind of getting a lot of strength off of the news with the Z and we're all 45Z, and then also a lot of strength from the soybean market from the anticipation that this trade agreement that we're trying to reach with China would in fact encourage them to buy U.S. soybeans, which they haven't done since very late last summer.
Hey, Jim, while we've got you here, kind of talking that biofuels as well, could all this be positive moving forward for even, let's say, the ethanol industry? If we get the RVOs from EPA kind of aligned with where the industry wants to go?
If we can, I mean, and that is going to be the key. If you can get these extensions in the RVOs, now a lot of these extensions we're hearing, Tony, have to do with renewable fuels. You're not hearing nothing about aviation ethanol. I think that is going to be very critical to bring that into it. But you got to remember, this is all being hyped up as we're hearing headlines of what's going on as they're writing this into the tax code. Now you got the House has got to pass a version of it, then the Senate's got to pass a version, and then mash it all together. So I think the fear of the industry is it could get clawed apart because remember we're still trying to mash this together and essentially cut taxes, finance the government all at the same time. So this is it's a moving target at the moment. But the more we can solidify this biofuel policy, the better off American agriculture will be.
For some reason in my mind, guys, I see a video of somebody trying to herd cats through this. Let's take a quick break, and speaking of herding, we'll come back and talk about this cattle market that's on fire. More coming up as Market Day Report continues. All right, so dressed already in the country at $360 this week, and we have some asking prices. South $224 to $225, and in the north $225 plus. So we'll see what happens and if we're able to develop some of this cash trade this week. How about yesterday? We had a kind of a quiet day of trading following the wild ride on Monday, but this is how they closed on the live cattle futures. $0.50 lower on the June, 211.62 on the August, up a couple of pennies, while the other contracts traded at 208 to 209. Feeders where we saw the $6 gains on Monday, but giving back a few pennies, if you will, compared to a $6 gain, losing 37 on the August at 306 even. September feeders 305.05, down a nickel. Every one of those contracts trading above $300. Hog trade on Tuesday was higher, up a quarter on the May, 90.97, $1.20 higher on the June at 99.50. Let's bring Brian Hoops back in. And Brian, cash trade, will that drive the markets for the rest of this week, or will the markets drive cash?
Well, certainly, they're following each other. Last couple of weeks, it's been the futures market leading the cash markets higher. This week, the show list numbers are way down, about 10,000 heads smaller than the previous week, only 217,000 head on the show list. We are looking at cash trade stronger once again. The bids are real scarce, as you mentioned. We've seen some asking prices in that 325 to 326 range in the Southern Plains. Dress basis, yeah, it's 360 plus is what we're going to see. The only real caveat, once again, Packer margins still deeply in the red. Cutout values languishing this week. They were pretty strong last week, but this week they're more of a mixed tone, and that's going to have to improve if we're going to continue to pay these higher cash premiums. But feedlots really don't want to sell at anything cheaper than steady money this week, and they want higher money. And you talk with some of these feedlots, it's so expensive to replace these cattle right now that they're willing to hold onto these cattle, feed them out a little bit longer, and get higher money for them in the future, rather than trying to replace them right away and put some animals back in the feed yard. So that it's kind of a market here that's on fire, and the Packers are kind of losing control of this market as well.
Hey, Jim, let's bring you in on this conversation. I've got the August feeder cattle 6-month contract here. Gives us a good idea of what we've been seeing now over the past 6 months. And to say that we're trading in that 306 range doesn't really tell the whole story. This is one that's been building now for quite some time. Are we to a point where we're starting to find the top, or with things like closing the Mexican border, is the sky the limit?
Right now, it does feel like the sky's the limit, and closing the border is definitely going to fuel it. Now they're going to reevaluate that every month, so that could open at any time. But like Brian did a great job showing the supply side of the equation. Now the question is, my question is on the demand side. That CPI data that came out yesterday showed retail beef was up 8.5% higher year over year, where pork prices were down, egg prices are down 10%. So the real question, Tony, is when do you get to the point where the consumer says enough's enough? I can't afford this. Maybe that's Memorial Day weekend. We see how how the clearance goes for Memorial Day weekend. But I'm fearful we're getting very close to the point where the consumer just says, I can't handle these high prices. But only time will tell.
Okay. Now, before we go, we've really focused on the row crop. We've focused on the livestock. Brian, any other markets that you'll be watching here quickly as we open up?
Well, everybody's kind of watching the gold market. I still think we've probably peaked at the 3,500 level, and we are seeing pretty sharp losses this morning. If that stock market continues to try and move higher, gold's going to come at the expense. Traders have been buying gold and selling the stock market in April. They're reversing that trade here this month, seemingly buying the stock market and starting to liquidate or sell some gold. And so we're seeing a lot of liquidation over in that gold market. I think that's one that could pull back and have a significant correction here while there's buying interest in the equities.
Okay, Jim, before you go, quick thoughts on a market you're watching.
There was reports that the Trump administrations were meeting with the South Koreans about trying to get their currency to firm up, and there's a lot of speculation that part of these trade deals President Trump's going to be doing is encouraging our trading partners to essentially increase the value of their currencies, and essentially our dollar will weaken. That'll help our exports, and so that would be a little bit bearish to dollar, but like I said, it would help our exports.
All right. Brian Hoops, Midwest Market Solutions. Jim McCormick, agmarket.net. Thanks, guys, for the fun little run around here as we talk markets on a Wednesday, and we're set to open up in a few seconds.
Yeah, I like what they said. We got a lot of moving targets right now, a lot to keep up with. Thanks, Tony.